let's get into Queen's Court. So for those of you guys who do not know what Queen's Court is, this is kind of like where I come to Matt, and Matt is kind of like my advisor. I bring him, a conversation, an idea, a trade, and, he just kind of talks me through it and, help the Queen decide whether she's making a good decision or not, right? So
that is my role. I am your advisor. Yeah. I want a cooler name than advisor. I want a badass title. That's all I want.
Well, I'll think of one.
We'll get one.
But the Queen also represents.
But right now, I'm the jester. I'm the jester that advises the Queen. That's what I do.
So, as you know, Matt, you were one of my mentors. We will not name whether you're number one or two, but you are one of my mentors. Right?
I am your number one mentor. This is accurate.
And you know that I love my cash flow. I love my covered calls, my naked.
You're the Queen.
That's my thing, right? But every now and then I have a little bit of an.
We all get an itch.
I'm getting that itch right now, and I want to go.
You like the price action, don't you?
I want to go Delta. I definitely do, particularly.
My girl wants to go Delta. Okay, let's go.
I wonder why, right? So particularly in the financial sector. So give me XLF here for a second. And I know you did the sector analysis yesterday, so you probably did, go heavy on the sector analysis here. But
definitely like the $40 breakout of finance.
Yep, easy stuff. My daily routine is very methodical. It's literally a rinse and repeat every day. I go through the indexes and I go through the sectors, find my buyers, go through my sector, find a stock, and boom, move on, right? Manage my trades, find a new trade, journal it, and keep it going. So here I am. I've got exposure in financials already because I got my Bank of America, which, by the way, last week, we talked about that, and then I uncovered it this week because it broke above 38, right? So now, guess what?
Guess what? We cover up again. That was easy. Overextending it, $50. We cover up again. Guess what? Dark cloud. Storm's coming. Put the raincoat on. It doesn't have to be hard.
So, it does. I don't want to say, if you trade the same stuff over and over and over again, you kind of start to see the behavior of stocks and stuff like that. So thank you for that tidbit last week on Bank of America, but I'm sticking with financials. Give me a AXP. I just want to kind of
any sector you like even remotely close to finance, like
technology.
No, and what I mean by that is like, I think it's your favorite sector to like participate in, though.
It is.
Yeah, I think it is.
I get a little bit of I still get a little bit of the dividend. So if I do hold the stock, I'm going to participate in some dividend payouts, right? But then I can go find those nice little, just I can bang them out and do some,
you can cash flow on them, but when you want to go directional, you can do that too.
Yep, I get a little bit of everything. I get
okay.
It's my Goldilocks. Let's say this. I think the financial sector is my Goldilocks, right? I can get
it's your just right.
My just right.
What's my just right? That's a great question.
Just right. Yeah. What is your just right?
Turkish lira cross pair against the dollar. No, I can't. No. What sector?
I would guess energy.
I'd say energy or tech. Those two sectors. I historically would say those two sectors.
I would peg you for energy.
Materials.
Yeah.
Materials. I love playing in materials.
Yeah. Yep. So give me AXB. Just kind of, going through the stocks that are just kind of, doing their thing, looking at American Express, right?
Pounding the table.
Just going, right? Just going. Look at Visa. Right, nice little pullback sitting right there on the
telling. Okay.
Working, right? We had two on the options report this week. We had Morgan Stanley.
MS breakout action against the multiple time frame. Yes.
And I know you guys talked about this probably even last week in AFL.
We did talk a lot about AFL actually last week. We talked more about Affleck last week than the Doug talked about Affleck last week. Like
So there was
we
more
were a
gentlemen
paid
saying
spokesman
that
for
that
Aflac
was
next
a
week,
commercial.
basically. Aflac might be done though in terms of new entries. You
Yeah,
probably got to
exactly.
wait a little
Exactly.
bit,
But it's just to kind of show the trend that is in the financial market, right? So
finance is strong. It's really starting to show those early signs of development. There's no doubt.
yeah. So I'm looking at their options report, and I'm looking at Morgan Stanley, and I'm going, that's looking pretty. So I'm thinking I want to go long call on
Okay.
Morgan Stanley.
Now, let me ask a couple questions.
Mhm.
Are you just looking? Are you just wanting some delta action, and you're just going to finance because you love your home of finance?
Yes.
Okay. Now a couple things. Now the sector is setting up. There's nothing wrong with this right now. The sector is setting up. Let's talk about your desire to get the long call very quickly. Okay. You are typically a cash flow queen, right? When in doubt, you write. Correct? Okay. So you're wanting a little bit of directional flavor in your portfolio because you like the improving condition of the market. You see some bottoming action. You're not an aggressive trader, but you want to dip your toe in a little bit here. And you want to do a little front running in the market in general, because we haven't actually confirmed against the reversal, but you want to pick leadership in sectors that have already done that. Correct?
You got it.
Okay. Because finance has done that.
Yep.
Tech hasn't.
Nope.
Tech might. And
But
if it does, it's going to be sexy.
Yep.
But I hadn't done it yet. Finance has. Okay. I see where your head's at. Now, you talked a little bit about a couple of the different stocks. Obviously, we do have some financial plays here. CFG, Citizens Financial Group, was a right shoulder breakout coming in. Little continuation. The weekly chart there is really kind of the strong point there. Kind of feel like that trade's kind of already been played out a little bit. Morgan Stanley was another one. You brought that one. We talked about the Aflac one. That's why you catch the earnings here. Look at the breakout there. 3 days into the breakout channel, you're probably already made your move. And that's an important thing here, because you're 3 days into the breakout channel on Aflac. You never want to say you've missed it, but you missed the entry, right? You missed the entry. You might not have missed the trade, but you did miss the entry. And when you miss the entry, your reward to risk ratio is going to be scaled off, your probability scaled off. Your timing of entry is so vitally important. So you probably missed that on Aflac. The question is, have you missed it on Morgan Stanley?
Give me the weekly on Morgan Stanley.
You can't miss it on the weekly because it doesn't even confirm until this Friday. And that's the beautiful nature of this. This is not a breakout that you're looking for a swing trade here, are you? Like I'm trying to understand kind of the desire here.
I just need
more
some
position.
Yep, more position. You know my style.
You've been shorting aggressively, and now you're looking for bullish delta. I get it. Okay, so the question is, have you missed the breakout? Number one, no. You're 1 day into the breakout. Yesterday would have been technically a breakout with confirmation here today if it closes above that level. So no, you're not too late into that, especially when you come out to the weekly chart here and you're looking at that weekly candle. Now, I'll be the first to admit Morgan Stanley could consolidate for a couple of weeks here, right? It certainly could. We're talking about weekly charts here, right? We're talking about a slight overextended going into the breakout there. So it could simply time correct a little bit. We could see a little bit of hesitation at the top a little bit. None of that concerns me, given the fact that you're not looking at this as a swing trade. You're looking at this as a position trade, if I'm gathering your thoughts correctly. Okay. Yes. So in terms of the position trade here, I think that's very important, because if it is a swing trade, I'm going to wait. Quite frankly, most likely I'm not looking at Morgan Stanley if it's a swing trade, though. And so since it's no swing trade, we're just looking at adding bullish delta in a clean technical environment that you're looking to carry for the next 2, 3, 4 weeks, maybe 2 months, maybe 3 months. It just depends, right? Trend trading, there's no time frame associated to it, because guess what? You can't pick. You can't pick when the trend ends. You kind of got to see it, right? You can't pick it. And so it's really about adjusting that stop loss over time. And so, what you're trying to do here, if you'll give me a little bit of,
oh yes,
of get the epic pen, get the epic pen. Hold on. We gotta get this. We gotta pull this down a little bit so we can draw. So what M's trying to do here, team, is M's got this neutral type setup where we just got some consolidation, little bit of chop. And what M's trying to say is she's trying to say, if it goes above, and think about this on more of a longer term time frame. What I'm saying is, if it goes above that resistance level, I want in on the action.
Yep.
Plain and simple. Let's make it simple. I just want in on the action. And so if we break back up above that key level of resistance, Emily's saying, okay, I'm going to add to the position. Number one, I like the improving condition. And again, improving condition of the S&P 500. I like the breakout in finance above $40. I want to add some bullish delta to my portfolio, but I don't want to do it in a swing trade where I have to deal with some significant chop on a daily basis and maybe some changing directions on a daily basis. I want to find something that was strong before. I want to find something strong that's going to be strong after, and I'm not going to tie myself to a singular time frame in the marketplace. And so she's looking at more of a position trade, adding bullish delta. Now, Em, you're right here in this price movement here, right? It could do this type of number. It could dance. It could dance. It could do the dance at resistance, and that would not surprise any of us.
Yep.
Well, if that's the case, because I do think you're saying, and the reason I bring this up, Em, is I do think you're slightly overextended on the weekly chart coming into the breakout. You're already 4 weeks coming into it. It might give you a little bit of hesitation. I want to stop me, though. The breakout's legit. And if the breakout's legit, you're good. And so I'm just saying you might see this dance here. And so technically, I do think you're in a position to add bullish delta from a market perspective. I do think we're in that environment where it start to dip your toe in a little bit from a bullish delta perspective. Finance is breaking out, which means you're absolutely there to add a financial component if you need one. You've indicated that you want some bullish delta because you already have all your data in finance. I know you've been writing covered calls nonstop on things like Bank of America, and you just have all of it already. So you're looking for some bullish delta here. You found Morgan Stanley. You like the multiple time frame assessment. You've attached a position trade to it. You got the weekly chart to support it. The only question is, when you're coming out to the market here, and let me take away the Epic pen there for a second. Okay, when you're coming to the market here, and this is something traders will have to agree to disagree on when it comes to certain time frames in the marketplace. You have told me something very important here. This is not a swing trade. If you work in short-term months, you're just asking to get criticized, and you're asking to lose money here. And so you got to go out a little bit more time frame here. I would start a minimum of 129 days out. I would start a minimum of 129 days out. That gets you all the time frame you need on a position trade. It also gets you the ability, if you desire, to sell some calls against this movement in times of hesitation. And so by going out a little bit more time in a position trade, you can still write some calls against the position in a horizontal spread, so that if we do see those moments of hesitation, we can bring in a little cash flow, offset a little bit of the risk there. So I like going out a little bit more time because that opens up the door of trade management a little bit more by selling some calls against the call position, creating a little bit of a calendar spread. When you go short term, you can only do it one time if you want, and it's got to be the right time. And it's just very difficult to find that edge. Find a little bit more time gives you a lot more flexibility in trade management. And so I like starting out with a little bit more time frame, just allow you to, because I do know you're wanting some delta here, but I know you're going to want to write a call against it at some point in the next 6 months. I know you will not. You just will. You just will. I know it. It's going to get overextended and you'll be like, well, I don't want to get out of Morgan Stanley. What can I do? I can just, I can write a call option. So it opens the door to that. And I think that's important to allow you to do what you want to do to maximize your position here. And so I'd start out a little bit more time frame. And then the second question is, well, what strike price? What strike price here? If this was a swing trade, I'd be like, man, pinpoint accuracy. We're buying that 53-105 call option. We're going to rock. We're going to rock. I think you got a little bit more subjectiveness here when you're going out a little bit more time. You're expecting some price appreciation. You're expecting to be in this trade from a position perspective. I think we can go out a little bit here, a little bit. I said on the podcast yesterday, Tim was asking me these questions on long calls, and I said, well, for veteran traders, they're going to do what they do. I am past the point of trying to tell a veteran trader the right rule. Veteran traders know what to do. They have their way of going about it. They know the rules, they modified the rules. The trader trusted, I trusted. Veteran traders are going to do what they do. When you're new to the market, though, you don't know those risks in dealing with out in the money call options. You don't know those risks yet. And so typically you want to buy a little bit more time and stay at the money. Right here, I'm gonna because you're the queen, right? You've been in this for a long time now. I'm gonna say let's work a little bit out of the money here. Let's work a little bit out of the money. Not a lot. Let's just work out to that 110 level. Okay, not a lot, just slightly out of the money. We expect some price appreciation here. We expect that to be in the money fairly quickly. And once it does, we can get out there and if Morgan Stanley gets overextended, we can start writing some call options against it. So I'm going to say let's work outside the money a little bit. 110, we expect a little bit of additional price action over the course of the next couple months here. 110 makes some sense. So I'm going to say, let's go out 129 days. That gets you all the amount of time you need to justify the trade management and the position style. That's at a minimum threshold, by the way. You can go out more time here. You just got to pay a little bit more money, but you can't go out a little bit more time here. Number two, we then went to the out of the money call option, not deep, just slightly out of the money. 42. I like doing it slightly above the strike price on that position. It allows you to work into that better delta. I like that as well from an efficiency and money perspective. That's my recommendation to the queen based on everything the queen told me. What do you think, queen?
I certainly appreciate that outlook, and being able to take a trade and turn it into something else, right? Normally, when we structure trade, if it's a bull put, it's going to remain a bull put, right? But when we start getting into long calls and we start talking about delta and and time decay and all those things, if it's not going against you, you got to be able to know either number one, are you going to exit the trade, or can you modify it to your advantage? So having that long-term perspective where I'm going to go 130 days out, 129 days out, and if I don't see the movement that I'm anticipating and the movement that I want, I can then turn that into a cash flow trade momentarily until I get the movement that I want. So I absolutely love that idea.
And the beautiful thing is you can actually turn it into just a bull call spread and reduce some of the risk if you want to do that too.
Absolutely.
So like entering into a long call with the 6 delta, man, you're really just you're swing trading. Yep. You're kind of pigeonholing yourself there, and you're just swing trading. You're being aggressive. You're swing trading. You know what you're doing. You bit the apple. You know what's in it. Okay. Number two, find a little bit of an out of the money option. Working into that position allows you to write a higher call option against it to create a vertical spread if you need to offset some of the short-term risk, or it allows you to write a little bit more of a at the money option if you want to bring in some cash flow. So it just allows a little bit more management techniques.